Hello everyone and welcome to my channel. On this channel, we talk everything about forex trading and tips to help you stay profitable as a forex trader. So if this is your first time coming to my channel, this is second video in this series if you don't watch our first video. Video link dropped in cards and description also. You can access directly from there. Welcome to Hope Pips, your premier destination for professional forex trading education. This is your power-packed Forex class on mastering the London session, one of the most periods in the Forex market. In this comprehensive lesson, we'll equip you with a structured strategy to trade the London session like a pro, covering 6 key chapters. The first one is definition and importance of the London session. The second one is best trading setups. The third one is multi-timeframe analysis. The fourth one is the real-world examples. The fifth chapter is how to combine trends, setups, and the final one is volume for high probability trades. Whether you're a beginner or an advanced trader, this class will provide clear, actionable steps to enhance your trading performance. Our goal at Hope Pips is to empower you with the tools and knowledge to trade with discipline and confidence. If you're new, subscribe, hit the like button, and join our community of dedicated traders. By the end of this class, you'll have a complete framework to dominate the London session. Let's begin with Chapter 1. Chapter 1. Understanding the London session, its importance, and timings words. Welcome to Chapter 1 of our Forex class. Today's lesson starts with the London session, a critical period for Forex traders due to its high liquidity and volatility. Let's break it down systematically. Let's see the definition of the London session. The London session is the primary trading window for the European Forex market, operating from 8 a.m. to 4 p.m. Greenwich Mean Time. Depending on your time zone, this translates to 3:00 a.m. to 11 a.m. Eastern Standard Time in New York, 12:30 p.m. to 5:30 p.m. Note that timings shift by 1 hour during daylight saving time. Use Forex Factory's time zone converter to align with your local time. Importance of the London session. 1 is high liquidity. The London session accounts for approximately 35% of global forex volume, driven by major financial institutions in London, the world's largest forex hub. This results in tighter spreads and larger price movements, especially for pairs like EUR-USD, GBP-USD, and USD-JPY. Overlap with New York. The London-New York overlap is the most volatile period as US traders join, amplifying price action. Economic releases. Key European data such as ECB interest rate decisions, UK CPI, or Eurozone PMI often released during London hours, triggering significant market moves. Trend catalyst. The session's volume often initiates or reverses trends, making it ideal for both trend following and reversal strategies. The next one is key timings, early London. High volatility as European traders enter, ideal for breakout setups. The most important thing is London-New York overlap. Peak volume, perfect for trend continuation or reversals. Late London, slower momentum, suitable for pullback trades or scalping. Practical application to track high-impact events during London hours. Adjust your trading schedule to focus on the 8 a.m. Greenwich Mean Time open or the overlap for maximum opportunity. Class assignment. Check your local time against 8 a.m. Greenwich Mean Time and mark the London session on your calendar. At Hope Pips, we prioritize this session for its profit potential. Let's move to Chapter 2 to explore the best setups. The Chapter 2, Best Trading Setups for the London Session. In Chapter 2, we'll cover the top 3 trading setups optimized for the London session's volatility and liquidity. These setups are designed to capitalize on the session's unique dynamics. Let's see the most popular London breakout strategy. Overview. Price often consolidates during the low volatility Asian session, then breaks out when London opens at 8 a.m. Greenwich Mean Time. Execution: identify the Asian session's high and low on a 1-hour chart. Draw a box around this range. Enter long above the high or short below the low at 8 a.m. Greenwich Mean Time, confirmed by a strong candle. Set a stop loss 10 to 15 pips outside the range. Target a 2:1 reward to risk ratio. Why it works: London's influx of volume triggers impulsive breakouts, especially on GBP and EUR pairs. Let's see some of the most working strategies. Rally-based drop, see the in detail. A reversal setup where price rallies, forms a supply zone and drops, signaling bearish institutional activity. If you want the advanced explanation, see our RBD video. This is how to execute it. First, spot a rally in early London, a tight base and a sharp drop. Wait for a retest of the supply zone with a bearish confirmation candle. Short the retest with a stop above the zone's high and a target at the next demand zone. Why it works: London's institutional selling creates reliable reversals at key levels. Let's see the next strategy. Breakout. Let's see in detail of this strategy. Price moved up to key levels during London volume pump, offering trend continuation entries. Then how to execute it. Draw key zones, nothing but resistance and support from the prior move low to high. Enter at the break of key levels with a bullish-bearish candlestick confirmation. If you don't know the breakout setup confirmation candle, please watch this video. We explained it in advanced level. Set a stop below above the confirmation candle. Target a 2, 1 or 3, 1 reward. Why it works: London's liquidity fuels strong trend resumptions after pullbacks. Let's see practical application. Focus on major pairs like EUR-USD, GBP-USD, USD-JPY for these setups due to London's liquidity. Use a demo account to practice each setup during London hours. I am giving you a class assignment. Open a 30-minute chart and identify one of these setups in yesterday's London session. At Hope Pips, we recommend mastering these setups for consistent results. Next, let's dive into multi-time frame analysis. Chapter 3: Multi-time frame analysis for London session trades. Welcome to Chapter 3, where we'll explore multi-time frame analysis to enhance your London session trades. MTFA is a cornerstone of professional trading, ensuring your setups align with the market's broader structure. What is MTFA? MTFA involves analyzing multiple time frames daily, 4-hour, 1-hour, and 30-minute, 15-minute to confirm setups, reduce risk, and increase win rates. In the London session, MTFA helps you navigate volatility with precision. Let's see the MTFA framework for London session. Higher time frame like daily and 4-hour. Identify the trend. Bullish by forming higher highs and higher lows, and the bearish movement is identified by lower highs and lower lows, or the third one is ranging nothing but the consolidation. Mark major support, resistance, or supply demand zones. For example, a daily supply zone at 1.3900 on GBP-USD signals a potential RBD. Intermediate time frame 1 hour. Look for London session setups like breakout, RBD, pullback setups. Confirm alignment with the daily trend or key levels. Next, move to lower time frame like 30-minute or 15-minute. Pinpoint entries with candlestick signals. Refine stop loss and entry points for better risk management. Step-by-step process. First, check daily chart. Check if EUR-USD is bullish with a demand zone at 1.1820. 30-minute chart. Enter long at 1.1845 with a bullish confirmation candle. Stop at 1.1830. Target 1.1880. Why it works. London's high volume amplifies price action, but MTFA ensures you trade with the trend or at key levels, avoiding fakeouts. Higher time frames provide context, while lower time frames offer precision. Practical application: use TradingView or MetaTrader to analyze time frames. Start with the daily chart, then zoom to 1 hour and 15 minutes for setups. I am giving you another class assignment. Analyze a pair like USD JPY across daily, 1 hour and 15-minute charts. Identify London setup and note its alignment. At Hope Pips, MTFA is our foundation for high probability trades. Let's move to real examples. Chapter 4: 5 detailed examples of London session trades. In Chapter 4, we'll analyze 5 London session trades with detailed chart explanations to demonstrate how setups, MTFA, and execution come together. Each example includes entry, stop loss, target, and outcome. Let's see the first example: London breakout GBP USD 1 hour chart. This is Asian session range on a 1 hour chart. At 8 a.m. Greenwich Mean Time, price breaks above 1.3820 with a strong bullish candle. Daily chart shows a bullish trend. 15-minute chart confirms with a bullish engulfing candle. Entry taken long at 1:38.25. Stop loss is at 1.3810. And our target is at 1:38.55. Look at the outcome. Price hits 1.3855 in 90 minutes, securing a 2-1 win. Let's see the example 2. RBD reversal in EUR USD 4-hour chart rally to 1.950 in early London, pace at 1.1930 to 1.1950, drop to 1.1880. Retest at 1.1940. Let's see the multi-time frame analysis. Daily supply zone at 1.1950. 15-minute bearish pin bar confirms. Look at our entry. Short at 1.1940. Stop loss is at 1.1960. Target is at 1.190. The outcome is at price drops to 1.900, winning 2-1. Let's see the example 3. London breakout fakeout in AUD USD 15-minute chart. See, this is a false breakout above Asian range, followed by a drop at 8:30 a.m. Greenwich Mean Time. First, go to daily chart. Look, the resistance is at 0.7470. Move to 30-minute bearish breakout candle. Nothing but confirmation candle. We can take a short entry at 0.7465. The stop loss is at 0.7480 and the target is at 0.435, which is 2-1 reward. Finally, the outcome is price drops to 0.7435, securing a 2-1 win. Let's see the example of RBD setup combined with news events on USD CHF on 1 hour chart. Rally is formed by post-US data. The base is at 0.900 to 0.9220. Drop after ECBs at 9 a.m. Greenwich Mean Time. Retest at 0.9210. Practice these setups on a demo account during London hours. Use my FX book to track results. At Hope Pips, we emphasize real-world practice for mastery. Okay, I think you understand clearly with these examples. Let's see the next chapter. Chapter 5: Confluence of Trend and Setups. In Chapter 5, we'll explore confluence of trend and setups to boost the probability of your London session trades. Confluence is the alignment of multiple factors, ensuring you trade with the market's momentum. Understanding confluence. Confluence occurs when your setup like London breakout, RBD, fib pullback aligns with the broader market trend or key levels. In London, high volume amplifies these alignments, increasing win rates. Okay, but how to apply confluence? Firstly, identify the trend. On daily chart, use higher highs and higher lows for bullish market and lower highs and lower lows for bearish market. On 4-hour chart, verify trend direction or mark major supply or demand zones. Match setups to trend. Trade breakouts in the trend direction like long in a bullish trend. Use RBDs at supply zones in bearish trends or at daily resistance. Next one is confirm with levels, means ensure setups align with support and resistance or supply and demand zones on higher time frames. Let's see one example, then you can understand very well. Here is our example trade on daily chart GBP USD bullish. And on 1 hour chart, London breakout above Asian range at 8 am Greenwich Mean Time near a daily demand zone at 1.3750. We can take long entry at 1.3775. And the stop loss is at 1.3760, which means 15 pips. Finally, the target is at 1.3810, which means 45 pips means 3-1 reward. See the outcome. Price hits 1.3810, winning 3-1. Practical application. Use TradingView to mark trends and zones. Only trade setups with at least 2 confluence factors like trend plus key level. Share your analysis in the comments. At Hope Pips, confluence is our edge for consistent profits. I think you understand this chapter. Let's move to the next chapter. Chapter 6: Confluence of Trend, Setups and Volume Timings. In our final chapter, we'll combine trend setups and volume timings for maximum London session success. Volume confirms institutional activity, making it a critical confluence factor. Let's understand the volume confluence. Volume spikes signal strong market participation, especially in London's high liquidity periods. 8:00 am GMT. Session open, ideal for breakouts. 0 am 12 pm Greenwich Mean Time. London-New York overlap, fueling trends and reversals. Post-news releases. High-impact events drive volume surges. But how to combine these? First one is trend. Confirm the daily 4-hour trend is bullish or bearish using EMA or price action. The second one is the setup. Identify a London setup like breakout, RBD volume move on a 1 hour or 15-minute chart. The third one is volume timing. Trade during peak volume periods as we discussed. Use a volume indicator to confirm spikes. Avoid low volume periods as late London 2 pm to 4 pm Greenwich Mean Time. At Hope Pips, we use this trifecta for unstoppable trades. That concludes our Forex class on the London session strategy. That's it, traders. Start practicing on a demo account to trade like a Hope Pips pro. Subscribe and hit the bell icon for our next setup video. Like and share this video and drop your RBD trades or questions in the comments. I read them all. Check Fastpull's tools, link below. Trade smart and keep stacking those pips with Hope Pips.